Ladies and gentlemen, welcome back to an intraday update here on AMC Stock. The stock is down about 2.81% at the time of recording this video. Still in a slight uptrend, believe that or not, but it is a red day. Now, we're not getting any new information. There's no new news that is coming out today. You're really just focusing on earnings from Netflix and Tesla, and this is having a far-reaching effect on the markets. All in all, down about 0.5% on the day. Granted, what index you're looking at, they're all in pretty red territory. Now, you're also getting some data coming out about home sales, which is very much not good, as well as the Philadelphia Fed that is showing we're likely heading into a recession. So we're going to get into everything that you guys need to know here on the day. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. And let's not waste your time. Let's get into it. So first things first, AMC stock at $4.95 per share. We're going to look at the ortex data. We're going to take a look at the options, everything you need to know specifically about AMC. But if we do go ahead and take a look over here, pending home sales fell in March amid volatility in mortgage rates. Now, it says sales of previously owned homes declined 2.4% in March compared with February. The weakness is likely due to a sharp jump in mortgage interest rates. Quote, home sales are trying to recover and are highly sensitive to changes in mortgage rates, said Lawrence Yun, chief economist for Realtors. This is not good for the economic outlook. As real estate does continue to slow, it has a dramatic effect on people's spending habits. So the real problem here is with companies like Tesla and Netflix that are reporting pretty bad earnings. Well, what if the economy gets worse from here? They're already pretty bad earnings. Are those earnings going to get even worse? And that's the problem in this market. And that's where a lot of people like myself would say stocks like Apple and your large tech are quite frankly in a bubble to the extent that we have not seen in a long time, based off of those earnings declines that we're likely to see based off of this data. Now, if we take a look at the Philadelphia Fed, this is alarming, and there's really no other way to put it. If you go ahead and look at the Philadelphia Fed, all these metrics were in deep red territory, but specifically the manufacturing index. So you were expecting a reading of negative 19.2. This reading came in at negative 31.3. If you actually click on this and look, this is the deepest negative reading that you have seen in years for the Philadelphia Fed. And if you take a look at the last 10 years minus the COVID crash, you're at the lowest point than you have been at in a very long time. If you look at the last 25 years, now, this is, I guess, the alarming part, because every time you have seen this go under 20, you've seen a recession. Literally every single time. And right here, you just hit 20, and that was roughly 2012, 2013, but you did avoid a recession during this period. But a break under 20, very indicative of a recession and a slowdown to come, as you can see from the dot-com bust right here, hitting a low of almost negative 40, 2008 hitting a low of about negative 42, the COVID obviously crash hit a low of negative 60, and then now you're sitting roughly right negative 31. So this would support the narrative of a recession. And again, if earnings were already bad so far with big tech, how bad are they going to get? We're not even in that recession yet. That's a problem. And I think that is mostly what is affecting the markets here today. And again, I want to point out what we had last week, the Michigan inflation expectations. this was a big jump, and I think this will come back to haunt the markets, whether it is in the next couple of weeks or next couple of months. I think this will become a problem for investors as inflation expectations do become stickier and likely, meaning inflation is going to go higher. That really throws out the narrative of Fed rate cuts. So this is what you have so far on the day. Now you do have a couple Fed speakers, Fed Wallers coming on right about now. So we'll see if he says anything that could spook the markets or even cause a rally in the markets. That is to be determined. Now, if we take a look at AMC, a couple interesting things happening here today. Obviously, the stock is still on the threshold securities list. That means there is a lot of FTDs with AMC, and that's, I mean, not a real shocker if you guys follow what's going on with AMC. Pretty well documented here on the channel what the FTDs look like. If you are unaware of the FTD numbers here today, today is April 20th. You're looking at 2.3 million FTDs that are coming due today. Now, tomorrow's going to be a big day for FTDs, sitting at about 6.3 million. Now, you also have the largest option expiration with AMC in a very long time. Taking a look at the Stonko tracker data, and we'll go ahead and refresh this. Calls in the money at about 7,500. Calls that are out of money at 488,000. That's a lot. And that's a really bad ratio from in the money to out the money. In the money puts at 264,000. Out the money puts at 590,000. This 264,000 put number, almost 265,000, and this 488,000 out the money call number could set you up for a big move tomorrow. It could be a big upside move based off of the low ratio of calls really in the money and the excessive amount of potential buying pressure that we could see if AMC does get an upside move. And as you guys probably know by now, puts that are in the money, market makers, they have to short stock to basically hedge out their positions, because there's not always going to be another person like me or you that is selling puts, right? So if you want to buy a put, someone's got to be selling that put. There's not always someone to do that. Most of the time, there's not. About 90%, 95% of the time, it's market makers that come take the back end of that. Well, market makers aren't going to lose money just to provide liquidity to the market to make sure you can buy your put. No, when those puts start to go into the money, they have to go out and short stock. So it's very much so like a snowball effect. And when the stock goes higher and the puts go out the money, the market makers no longer have to have all of those shares short to oblige for the puts. So that is buying pressure. And then obviously a typical gamma squeeze, as you guys do know, when calls go from out the money into the money. Now, I'm not going to bet the farm on it. I'm not going to hold my hat to it. But if you do get a bullish reaction or a bullish start to the day tomorrow, it could continue and it could have some, velocity to it. And that's something I'll definitely be watching out for. Fridays tend to be pretty big days for AMC. Now, if we switch back to look at the ortex data, the short score is 88. The short interest dollar amount, the dollar value, sitting at 695.5 million. Short interest of free float, 26.41%. The free flow out on loan at 37.5%. Shares out on loan, 193.26 million. Days to cover, sitting at 5.21, with cost to borrow rates around 250%. 100% share utilization. If we take a look at the cost to borrow average at 350%, cost to borrow max at 362%, and cost to borrow minimum at 342%. And again, there's 0 shares that are currently available to be lent out as per the ortex data that we are seeing right here. So all in all, this is like a powder keg, and I don't really understand the risk management that goes into shorting AMC before an explosive catalyst, such as the next court update, which I firmly believe will be a very bullish event for AMC stock. But nonetheless, it looks like you have Waller coming on right now, getting a little bit of a drop here in the broad markets. Watch to see how this could affect AMC recently, not as much today, but recently when big tech has been falling, AMC has been rising. I think you're getting underlying concerns about the economy today, which is not necessarily a good thing for the theater business, right? So I think that is somewhat a concern on the day, a reason for shorts to kind of push AMC stock down. But watch for that reversal potentially coming tomorrow heading into the weekend. So that is really it for this video. Key levels to watch: 450 on the downside. You're at $4.93 per share, so got a pretty good cushion there. On an upside move, it's that 50-day moving average. The 50-day, 100-day, and 200-day moving averages you should be watching very, very closely. That 50-day moving average at $7.10 per share. The 100-day moving average at, that's strange, $13.20 per share, and the 200-day moving average at $8.70 per share. So 50-day, and then it looks like the 200-day, and then the 100-day up here, and these are going to be the key levels. Really, resistance around these levels is what we have seen, but it wouldn't surprise me to get some news before April 27th and to see a pretty explosive rally. And as we have reported in the past, the option premiums for AMC are pretty damn attractive heading into a major catalyst like the next court update that we're going to get pretty soon here. So if you guys want access to all of my trades in real time, if you guys want to come trade AMC with me as well as many other names, link down below in the description of this video. In the meantime, hit the like button and subscribe to the channel if you have not already. But most importantly, enjoy the rest of your day, and I will see you in the next one.